I believe this is the beginning of something massive for the price of gold. And when you talk about signs of stress in the paper gold system, the February contract on COMEX has seen deliveries, stand for delivery, of 59,296 contracts. That is by far the largest delivery ever at COMEX. The previous record was in the middle of the QE to infinity nausea in June 2020. It was 47,132. This is 12,167 contracts more than the largest ever. That's 5,929,600 ounces. Try multiplying that times 2,900 and your calculator will go E. It's too big for your calculator.
Join our WhatsApp channel for real-time updates, breaking news, and expert predictions on gold, silver, and financial markets. Link in the description or pinned comment. Stay ahead of the curve. Don't miss out.
In today's news recap, gold prices see further selling pressure as U.S. CPI rises 3% in the last 12 months. The gold market is seeing some solid selling pressure as U.S. consumer prices rose sharply last month, shifting expectations that the Federal Reserve will be able to cut interest rates anytime soon. The consumer price index rose 0.5% last month after December's 0.4% increase, the U.S. Bureau of Labor Statistics announced on Wednesday. The inflation data was significantly hotter than expected. Economists were looking for a 0.3% increase in consumer prices. The report noted that over the last 12 months, headline inflation rose 3.0%.
2,747 silver contracts in February, or 427 tons, 13,735,000 ounces, all coming to New York because of the tariff threat. Or is it the tariff threat? Could it be a ruse, perhaps? Along those same lines, somewhere in the neighborhood of November, I always bitched about the fact that JP Morgan paid a $920 million fine for manipulating the metals market and somehow still got to be the custodian of the world's largest silver trust, SLV, they and BlackRock, amongst other ETFs that they own in London and around the world, gold and silver ETFs. It was HSBC Bank that always controlled GLD. But guess somewhere in the last few months who just took control of GLD? Oh my goodness, it's none other than JP Morgan, the fox guarding the hen house. So you have JP Morgan and BlackRock now in custody of the largest silver trust in the world and one of the largest gold stockpiles in the world, amongst other ETFs. And what have I always said when people say, do you think gold will be confiscated? I said, no, I think they'll take the ETFs because we can't take possession of the ETFs. The commercial banks can. I'm going to talk about that in 1 second. But instead, they could take all of that gold and silver, look the world in the face and say, look, we didn't default on anything. We didn't take gold from our citizens. It's not illegal to own it. Physical gold ownership is just fine. All we did is close the ETFs. The prospectus gives us the right to do that. No laws broken, no civil liberties infringed. Sorry. And they could do that like that. JP Morgan in 2 vaults, one in New York and one in London, now hold more gold than the majority of the G20 countries. Just like that. And it's the largest, pretty much largest silver stockpile in the world, or one of them, on top of what they already own. So let's just stop for a moment and reflect before I finish. So we have Scott Bessent saying we're going to monetize the asset side of the balance sheet. What assets other than land and gold? We have him saying it's his largest holding. We have Judy Shelton saying the only way this will ever work to maintain demand for the U.S. Treasury is to back it by gold. What is gold but the only other tier 1 asset in the world? Who's been buying it and repatriating it? The central banks. Are they front-running something? What did the BRICS say? Oh, Dilma Rousseff, the former president of Brazil, head of the new development bank, we've agreed in principle to a new settlement currency called the unit. 40% gold-backed, 60% BRICS plus currencies traded over Enbridge. Now, there was a hiccup with Enbridge. We've talked about that. It's now called the bridge. They will continue moving forward. But the moral of the story is, what did Zoltan Pozsar tell us? Used to run the New York Fed, understands the plumbing better than anyone of the system. He said it's Bretton Woods 3, a system that will be described by transparency, blockchain, and commodities, gold. So what did they say they were going to do? A settlement token pegged to gold, deliverable upon request, and 60% basket of currencies. So what did Judy Shelton say? We're going to issue 50-year treasuries and then issue stable coins. Hopefully the private market issues stable coins backing off the Treasury. They said no CBDC, but they will start doing stable coins pegged to gold and pegged to the Treasury market. Third party like Ripple or like Tether, who are already loaded in U.S. Treasuries, almost entirely. Their balance sheet is U.S. Treasuries supporting the legacy system. They'll issue these too, not the government, the control of the central bank digital currency, but they will still control the on-ramp and the off-ramp. It's the same thing in a different hat, issued by a third party instead of by the government. It's genius. So she wants to issue 50-year Treasuries backed by gold, says Trump will issue them in July 4th, 2026, and then stable coins come off of it. She said that they need to audit the gold. Maybe they'll even revalue the gold, just like Loomis said, and the Dutch National Bank and the Bundesbank held in the gold revaluation account, the only other tier one asset. But Trump says tariffs, so we got to bring all the gold and silver back to backfill all of these rehypothecated naked shorts. BS. I believe in my soul. I believe in my soul something bigger is in store for gold. I truly do. And all of that gold and silver is coming back to the United States. We are now a net importer because we realize the only way to inspire confidence and maybe front run the BRICS. You know, he's having meetings with Xi Jinping and Putin. Is he discussing this? Is he saying, let's just massively revalue gold? It will benefit you guys. It'll devalue the dollar. That's what he wants. It'll devalue the dollar against gold. Gold goes to the moon. Every $1,000 or $4,000 increase in the price of gold gives $1 trillion free and clear to the Treasury General account. Peg it to treasuries, re-inspire confidence, pay off some of the debt. Now, one last piece, you know, at the same time that our retail market is very slow, as you paid reference to, 16 tons of gold have recently exited GLD. And that's the talking heads would say, well, that's profit taking and people buying Nvidia and Bitcoin and looking to the Trump euphoria and the risk on trade. No, it's not, folks. It's the insiders, the big commercial banks redeeming their shares for the physical gold before something happens. They're taking all the metal out of GLD in physical gold and moving it where? Into JP Morgan's account? Maybe. Don't know. It's share redemptions out the back door. It's not people selling. One last piece. When you talk about the potential for a silver squeeze, there is right now on SLV, where did I put that? On SLV, there is a 953 million ounce short position. Talk about as stupid as a mud wall. And you have to borrow shares to short it, right? The cost of borrowing SLV shares over the past couple of weeks have gone from 0.5% to 12%. Seems a little daunting, don't you think? And the number of shares over the past roughly 2 weeks that are available to borrow went from 10 million to 10,000. That's a 99.9% reduction. How do these short positions cover? You're talking a short squeeze potential of supreme proportions. Now, I'm not saying it's going to happen, but it's a little bit scary. So when you see these massive vault movements from London to New York, they're signaling a market event. And the physical silver and gold demand is accelerating with the biggest players in the world scrambling for direct ownership. And instead of T+1 in London, it's now T+6 to 8 weeks. That's almost a default as far as I'm concerned. They can say whatever story they want about being backed up or having to refine 400 ounce into 100 ounce. You know what? Send us the 400 ounce. We'll refine it ourselves. Something is happening. And my guess, if I had to guess, is that Trump basically knows, his people know what we've been talking about all these years, that the idiots who have been suppressing the price of gold and silver and all of the commodities are playing right into the hands of the people who are trying to de-dollarize. And if you want to win, you need to bring it all home and beat them to the punch. And I'm telling you, all of these things coming together at once. So this is what I did with the BRICS. And I said it out loud and people thought I was crazy. Put all these dots together in and of themselves. Each one is kind of interesting and impressive. Put them all together and it's like, man, could it really be that it's the Fed or the Treasury that just bought that $4 billion in gold from JP Morgan and had it delivered to the COMEX? Could it be that the 12 million ounces that have come in have all been part of a bigger plan rather than just not over alerting the rest of the world to this is what we're going to do? But
call it the Trump threat, I believe it is. What do you think about Andy Schectman's insights on the BRICS nations, the silver squeeze, and the potential explosion in gold and silver prices? Are we really on the verge of a massive shift in the global financial system? Let us know your thoughts and predictions in the comments below.
Don't forget to hit that like button. It really helps out the channel. And if you want to stay updated with more content like this, be sure to subscribe and click the bell icon so you never miss a video.